Saral. Uh, this is Ashok Minda. Good evening, ladies and gentlemen. I welcome you all to the second quarter of financial year 21 earnings conference call of Minda Corporation. I would like to thank you all for joining us on this call and hope all of you are doing well. The auto industry in second quarter of financial year 21 saw sequential growth in demand as the economy recovers from adverse impact of COVID-19. Two-wheelers, tractors and passenger vehicles saw revival in production and sale volume, indicating preference for personal transport and growth in agriculture sector. In light of these circumstances, I am pleased to report that Minda Corporation delivered consolidated revenue from continued operation of 656 crore, a growth of 17.5% on year-on-year basis. It should be noted that over the same time, the industry declined by 6.2% on year-on-year basis. Our growth was driven by three major factors: increasing in wiring harness content in two-wheeler category, increasing in aftermarket sales, and increase in exports. Our focus on cost optimization and higher operational efficiency has helped us in moving to double-digit EBITDA margin and a net cash positive position, which will be explained further by our Group CFO, Mr. R. Lakshman. Focus on enhancing customer relationship has helped us winning repeat businesses and also new business from our existing and new customers, which will be further explained by our Group Marketing Officer, Mr. Neeraj Mahajan. We recognize and appreciate the efforts and the support extended by our employees during the challenging period in the health pandemic. We already have rolled back all salary cuts from September, which were earlier planned from October. With a focus on shareholder value creation, profitable growth, and customer satisfaction, Minda Corporation Board of Directors has approved the appointment of Mr. Akash Minda as an additional director in the category of executive director on the board of the company with effect from 5th November 2020. The board has also approved preferential issuance of equity share up to rupees 83 crore at the rate of 70 rupees to a fund managed by Phi Capital Management LLP, subject to approval of the shareholder at an EGM. Phi Capital, as auto industry expert on their advisory board, it has partners such as Mr. M. Lakshminarayan, Chairman of WEBCO and ex-CEO of Bosch India, Mr. R. Harish, who comes from TVS family and is the MD of TVS and Sons, Mr. Sivaram, ex-CFO and CEO of Punjab Tractor, Mr. Ravi Sood, ex-CFO of Hero Motor Corp. We expect to draw on this experience and expertise of the Phi Capital team to advise Minda Corporation and further its efforts of creating value for all its shareholders. Phi will support us in identifying value creation opportunities, performance management, financial planning, and long-term strategy. Minda Corporation and FI will work jointly to build sustainable business and create long-term shareholder value through operational partnership. Their investment in the company will only cement their commitment to help and support us in this endeavor. The fact that we have been able to get this investment definitely enhances our company's ability to look at larger investments, which will be important to fund our plans relating to developing and acquiring future technologies, competencies, and investments. Now, we shall begin detailed discussion on financial and operational performance. With this, I hand over the call to Mr. Lakshman, our Group CFO. Over to you, Lakshman.
Thank you, Mr. Minda, and good evening, ladies and gentlemen. I will now cover the Q2 financial performance of Minda Corporation, and I'll be referring to the slides that we have prepared for the presentation. And if such of those of you who may have these slides, I will also refer to the page number. I'll keep this presentation very short, and then the last part of the presentation will be handled by Mr. Neeraj Mahajan, our Group CMO, and thereafter we'll open it for questions and answers. I'm directly jumping to slide number 3, where on the left-hand side of the slide we have our summary, which is FY 2020 revenue, which is 2,800 crores, business verticals, mechatronics, information and connected systems, plastic interiors and aftermarket. Key customers continues to remain our greatest strength. The who's who of Indian OEMs are our key customers. We have 30 manufacturing facilities and of course our very deep R&D capabilities thanks to the SMIT R&D Center in Pune and multiple specialized R&D centers across India. Market cap as on 30th September, about 1,700 crores. On the right hand side pie, you'll see the H1 FY21 breakup of revenue as compared to H1 FY20. By geography, roughly it's the same. About 85% of our revenue now comes from India. About 8% comes, 9.6% comes from Europe and North America, and 4.9% comes from Southeast Asia. If we look at end market, here there is a change. You will see that now about 55% of our revenue is coming from 2 and 3 wheelers. 19.5% of our revenue is coming from commercial vehicles, which is a dip from earlier 25%. And the aftermarket revenue share has substantially increased. Earlier it used to be about 12.9%. That has increased to 17.5% in H1 FY21. Passenger cars remain at about 7.7%. If one goes by business verticals, which is the last circle at the bottom on slide number 3, you'll notice that mechatronics and aftermarket together contributes 57.8%. Mechatronics contributes about 40% and aftermarket is about 17.5%. Information and connected system contributes the balance roughly 42%. In our categorization as of now, interior plastic is also part of the information connected. It's a small percentage. Moving to page number 4, you will notice that in H1, all the figures are negative. The Indian auto industry itself fell by about 42% overall, with 2-wheelers going down by the same number, passenger vehicles going down much further, and commercial vehicles going down by 56.9%. So the only small solace was the tractor business, which went down only in single digits. However, the Q2 numbers, which is in the second bottom of the slide, is giving a more reassuring picture in terms of green shoots. You will see that the auto industry has gone down about 6.2% compared to the same quarter last year. 2-wheelers have gone down 4.8%, passenger vehicle 3.1%. Commercial vehicle continues to go down further than others, which is 16.4, and of course tractors have gone up by 22.5, and we have been beneficiaries of this. So in Q2, basically we saw a month-on-month improvement, which has been positive given the preference for personal transport restocking because of BS6, and also that agriculture sector doing very well. However, we continue to face challenges in terms of the subdued economic environment, lower consumer sentiment, and also the lockdown has not been fully lifted in all states. So to that extent, there has been some impact. Moving to the financials, which is on page number 5. In terms of the consolidated performance, this is a summary. Of course, more detailed is available on our website. If you see the first column, which is the Q2 FY21, which is the first quarter we are having in a what shall we say, a kind of a post-COVID era. We have posted a revenue of 656 crores. About 7 crores came from other income, largely FD income, interest on FD income, and our EBITDA was about 66 crores. So 66.5 crore EBITDA translated to about 10.1%. We had a PBT from continued operation of 36.6 crores and a profit after tax of 25.8 crores. So if we compare this to what was reported last year, Q2 FY20, which included a lot of other businesses, those sales have been down because of the loss of business at our European operations. The EBITDA margin has definitely and decisively moved to a double-digit EBITDA margin number. And I will come to it and explain further as to why we feel that this double-digit EBITDA margin is sustainable for us going forward on a post-COVID era. The half-yearly numbers, which is the second last column of FY21, at 834 crores and an EBITDA of 46 crores, includes almost a washout period for Q1 and good performance for Q2. So the average of that has brought us down to a 5.5% EBITDA. Overall, it is a 9.6 crore loss at the end of the H1. So effectively, what we are saying is we have largely compensated for the losses of Q1 by way of the profits of Q2, and therefore going forward, the post-COVID era only looks positive for us. That's these on slide 5. Now moving to slide number 6, we are analyzing the quarter in terms of revenue, EBITDA and PAT, more a detailed description of what we covered in slide 5. If you look at the revenue of 656, you will see that the overall revenue is lower because obviously there is a discontinued operation of Minda KGSM. Apart from that, we continue to show a growth of about 17.5% if you exclude that, as Mr. Chairman also pointed out. Our transition from BS4 to BS6 has also led to increase in wiring harness content, and our aftermarket and exports have done well. In the sense, in fact, our aftermarket sales during Q2 has jumped by about 32%, and our overall exports from India overall has jumped by another 18%. So these two have really contributed to our increase in sales. And as we said, each of these small engines are helping us in kind of giving a more consistent performance irrespective of one segment doing better or other. In terms of EBITDA margin, about 10.1% in Q2 FY21. Of course, there has been a favorable impact because of discontinued operations, and the continued operations of EBITDA did get impacted by an adverse product mix and labor productivity because of COVID, as well as new labor coming in, and the transition from BS4 to BS6. It was also challenged by raw material indexation, by copper prices shot up, but that's more of a lag effect, and that will get compensated in the next quarter to come. So in summary, the EBITDA margin has negatives which are not going to continue in the future, in the sense that the labor productivity will only go up, We expect the product mix to only get better because commercial vehicles have been down, and now we are seeing some amount of stabilization in the next few quarters, and the transition to BS6 is complete, and the lag effect of raw material indexation will only get impacted positively going forward. The net profit at 25 crores has taken an impact of the JV losses also, which is about JV shared loss about 16 million as against a profit of 2.9 crores or 29 million in the same quarter previous year. There has been a tax effect also in that in the Q2 of last year, we had taken a much smaller tax provision because the effective tax rate changed and we had taken quite a bit of provision in Q1. So therefore, Q2 of FY20 was less. And therefore, if you're comparing it to the same period, it looks as if in the current Q2, we have provided for more tax. But of course, our belief is in the whole year, all of this will get nullified. Coming to slide number 7, you'll see that on the quarterly performance on the left-hand side graph, the mechatronics has been supported by a high aftermarket growth and high exports growth. Our aftermarket, which grew substantially well, has helped mechatronics division do very well because half of the sales of aftermarket comes from mechatronics. And they posted a 12.7% EBITDA margin in Q2, which is again credible given the fact that they just come out of COVID. As compared to the same quarter the previous year, yes, there has been a dip from 13.8 to 12.7. And that is definitely because an adverse impact of the high cost of operations due to COVID. We expect this to go away in the next few quarters. Favorable impact, as we had mentioned, is higher aftermarket as well as exports. The division and the company as a whole has gone through various cost-cutting measures that is also got reflected. The information and connected systems continues to be a challenge for us. Why am I saying challenge? Is because you will see that though sales have gone up because of BS6, we had mentioned that our ability to reach the EBITDA margin will take about 2-3 more quarters. So you see a dip from 9.6 to 6.7%. Some of it is only one time because the raw material indexation, because of the lag, has definitely costed us a good amount of this delta between 9.6 and 6.7, and we see that coming back in Q3. Apart from that, again, this division also continues to take various cost-cutting measures across their factories. Going to slide number 8, our net worth stands at 950 crores. Our gross debt stands at 426 crores. However, the cash equivalent is more than the gross debt, and therefore our net debt figure is negative in the sense we are on a net basis surplus. And therefore, a net debt to net worth ratio doesn't hold anymore. Ratings, absolutely consistent. We continue to be rated by India Ratings and Research as well as CRISIL. India Ratings gives us a AA-, and CRISIL gives us a India 1+, and for long term, they give us A+ stage. So that's the quick summary of the financials. Then I'm going to request my colleague, Mr. Neeraj Mahajan, to take us through the business orders that we have won, the awards and the CSR section, and of course, his views on the market. And thereafter, we're happy to take questions. Over to you, Mr. Mahajan.
So thank you very much, Lakshman. Good evening, ladies and gentlemen. My name is Neeraj Mahajan. I'm the President and Group Chief Marketing Officer. So I would say in all, compared to Q1, Q2 has been very, very productive in terms of order booking. To take you through the slides, some of the colleagues in this call, those who have that information in hand, can refer to that. I'm pleased to share that lifetime order book for replacement for the company has been close to about 25,258 million, and new order book has been for 149 million in Q2FY21. It's a good situation to be in terms of overall order book right now. Let me go more into details about it. Our business vertical one, which is mechatronics. In Q2, we have made a lifetime order book worth 5,365 million, and year to date, lifetime order worth is in excess of 9,340 million Indian rupees. Naturally, in the first half, as we all experienced the challenge of first 2 months with the businesses, struggling to complete the activity. But the second half has kind of all the pending orders were cleared by the OEMs, which we were negotiating with, thanks to our relationship, which is growing in stature with them. Let me confirm about the replacement. Some of the key orders which have been received from replacement and new both. Our mechatronics division in the replacement market has got a very large two-wheeler security system lock set related business, which is touching about 2,850 million lifetime order. However, our new edition order book has been also very healthy. We have begged our two-wheeler order again for the security system lock set, lifetime order of about 1,400 million. We additionally got die-cast division tier 1 and OEM order book, very healthy from various domestic and international customers. Overall order book value of 478 million. We got order book for tractor industry for starter motor and alternator division of ours for 114 million lifetime orders. They are, these are the orders which we have been working upon in terms of expanding our portfolios. These orders will be, executed from next year onwards up to 2023 and beyond. If I look at it from information and connected system related development in terms of new order book, as Lakshman has mentioned, our impact of the cost increase is hurting us in that regard. Though we have booked 25,000 million worth of orders in Q2, Q1 order booking was low, and as of date, YTD 2021, we have booked about 28,270 million orders. To give you more insight of the businesses in information and connected system, the replacement orders in the commercial vehicle space, we got close to about 6,222 million. We got two-wheeler replacement orders for our existing customers for a very large value of 15,531 million. This was a very prestigious order for us in combination of two customers. But we have also been making excellent progress now in our tractor and commercial segment, where we have got new orders for Minda Stonebridge on instrument cluster for 749 million and also for commercial vehicle 220 million from the commercial vehicle segment respectively. Plastic division has started to show progress in terms of its India operation now after KTSN. We have booked in Q2 lifetime orders worth 42 million in Q2 and 176 million since year to date. This is from a very large commercial vehicle tier 1 customer, and we are expanding our portfolio in lightweighting and plastic engine components with them in this space. For export, it has been a good beginning in terms of getting both new and replacement for wire harness, as well as our expansion into at a higher profitability as well. So in case of replacement and for the new order put together, we have 1,760 million rupees lifetime order book for exports. I would say in all, the order book situation for YTD looks very promising for us to have better order book or better situation for years coming ahead. I'll move to the next slide to just share a very broad outline how Minda Corporation has also been recognized and doing other activities related to CSR and others with the with the foundation we have. One of the prominent activity which was significant in the media as well was Thar introduction, and I'm very pleased to share that we have 9 product segments serviced by Minda Corporation, various companies in this case, including wire harness, one of the most let's say advanced cluster, which is instrument cluster, which is supplied from our side. We also had EOT sensor, air vent, door sash, also in terms of the glove box, and various other components going into this product. And we are very excited the way the order booking is coming in for this, and we wish success for Thar in the coming days. Minda Stonebridge was also recognized for Q1 Quality Award coming in from Ford Motor Corporation for the supplies which we are providing to them, and we won also the Q2FY21 Kaizen Competition Award for Minda Stonebridge over and above. This year, most of the OEMs have so far not come out with their award announcements because of COVID, because most of these awards are announced during the annual supplier convention, and the award in this regard is not being coming forward so far from their side. But be assured that Minda Corporation, with its state-of-art plant and its delivery and quality, is going to be moving towards more awards being recognized or given to us from our customers going forward as well. In terms of our CSR initiatives, I'm very pleased that as an organization, while the entire world is fighting with COVID, our foundation, in association with Bhagwani Foundation, provided food and essential commodities distribution through Sadbhavna project to Indian Army in Jammu region. That was a very, very appreciated effort from Indian Army side as well. We also produced masks to service the different segment of society. Over 16,000 masks were produced by our Pantnagar facility of Akarshan, which is our which is a assistance center for local employment and training providing facility. We also had virtual classes completed for convocation. Unfortunately, this year the physical one could not take place, so all students could also be covered through the same, and we are also trying to sensitize them through the COVID-19 program using Bhagwani Foundation facility. As far as the market outlook in general is concerned, let me share with you, most of the OEMs have produced a very, very robust volume, especially for four-wheeler and two-wheeler alike, for readiness on festivity, and Navratra season has gone very well on the retail trade side. We are keeping a very close watch at this point of time for the November month requirement. The schedules are extremely healthy, which shows the confidence from the customer about the retail opportunity which they are going to have during this festival season. However, as an organization, we are keeping very close watch on both market as well as our cost to ensure that we as an organization should be able to perform among the peer group in the better category. That's all from my side in terms of sharing of information on our order book. I'm available for Q&A post that. Thank you very much.
Should we open the floor for questions? Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question, you may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question, you may press star and 1. First question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yeah. Hello. Am I audible?
Yes, sir. Go ahead. You're audible.
Yeah. Thank you for the opportunity. Yeah, sir. Sir, few observations. So, the current quarter's number are adjusting now for the Minda KTSN. Am I correct?
Yes.
Yeah. So, just an observation, I'm a little bit perplexed as to why when an asset is sold, I couldn't see drop in depreciation or changes in other expenditure lines. If you could give some comment there. And second, the gross margin reduction that I see, is it a function of the BS6 product line supply? If you could, enlighten us on these areas.
Yes, sure. So 2 points. One is the reduction in gross margin is definitely a couple of reasons. One is in the wiring harness, the shift from BS4 to BS6 has costed us our gross margin reduction. Some of it is temporary, like the labor productivity or raw material indexation, and some of it will take a little longer, which is the change in product mix, where we used to heavily supply to commercial vehicles, which was a slightly more profitable business. So that's the answer to your question. Coming to depreciation, the depreciation part, yes, in die casting, etc., we have been expanding, and there will be a small lag in catching up between depreciation and the sales. Other expenses partly has increased because of specific COVID-related challenges, and we do not see that to be a very sustainable number.
So so I can see a 200 bps reduction in gross margin and an EBITDA margin at about I think 10% for the quarter. We had during the Minda KTSN call at the time of doing the transaction, had done a call and called out that the margin in the business should comfortably be about 11 to 12%, right? So where are we on that journey? And if you could give some direction on the gross margin expansion incrementally and EBITDA margins incrementally. And I still couldn't get
EBITDA margins. Thanks, it's a good question. I'll talk about the EBITDA margins. Gross margins do get impacted because of the mix, etc. Whereas EBITDA also captures the savings that we do in fixed cost as well as all other points with respect to the operation. Now, EBITDA margins, we have, I believe, we have firmly moved to a double-digit EBITDA margin regime. Now, moving from 10 to 11 and thereafter is a quarter-on-quarter or a season-on-season exercise, and that is something which we believe that it will steadily increase because the challenges are behind us in terms of structural challenges and the COVID-related points which we are seeing green shoots across segments that we are strong in. And I would request Mr. Minda also to add his views in terms of where we are going in our journey. But Rajesh, my point is that in terms of margins, we are definitely moving towards a consistent double-digit.
As Lakshman mentioned, and we have shown in the presentation also, that one area is the indexing, which is one-time impact, and this quarter, this has impacted the indexing impact is a good amount, which is not definitely not going to happen in the next quarters, not that significantly. The another is the month on month there will be a improvement in labor productivity, so that will also improve the EBITDA. The product mix, which the passenger, the commercial vehicle, that will also add the better margin product, and that will also add EBITDA margin. And another area is that the BS6 to BS4 to BS6, the localization, although it is little longer, but there is a good content of the imported material, and we are in the process of localization. That will also give us a benefit in reduction of the raw material cost. And all those factors and that will help us not only sustaining the double-digit EBITDA margin, but also improve in all those incoming quarters.
And I couldn't gather your answer on the depreciation side. So ideally, the depreciation should reduce, right, when you have sold such a big asset outside India, which was 1/4 of your sales.
No. Depreciation is apple-to-apple comparison.
Okay.
So if you see, let me take an example. If you look at our June quarter, depreciation is about 20 crores.
Okay.
And our September is gone up to about 24 crores.
Okay.
The reason is because June, because of lockdown, etc., it was a one-shift depreciation. And now we are back to our 2 or 3 shifts, depending on how the plants run. So I think it will be better to look at a couple of quarters numbers and full year numbers, because Q1 and Q2 as well as this post-COVID ramp up has distorted comparisons a little bit.
And so lastly, I'm just seeing the press release. There is this fundraise of 1 crore 18 lakh equity shares, 83 crore rupees raised. What is this and why is it done?
Can you say that again? Sorry, Ritesh, sorry, missed you.
In the release, there is this fundraise of 83 crores.
Yes.
Equity raise. Yeah, why is it done? Yeah.
So effectively,
I would also, Lakshman, I will.
Yeah.
See, I had the equity fundraise and diluting at this price, that we are looking at the long-term benefit of inducting such a financial investor, given the value addition expected, that we believe this is a small dilution at this current price, and we believe that this 5 capital contribution to the company will far out with a small dilution that is being currently proposed, because as I mentioned in my speech, the 5 capital has auto industry expert on their advisory board and in the investment team, and we expect draw from this wealth of experience for the company benefit. And so the investment in the company is cementing of their commitment, and pricing is a function of timing at what we get in return. And we believe that this management and this will help us to create a long-term sustainable value to all the shareholders.
Thank you very much. Next question is from the line of Ritesh Gandhi from Discovery Capital. Please go ahead.
Hi, sir. Just a couple of questions. If you could just, emphasize again for us what value addition you're expecting, because as per at least our analysis, you have effectively sold 80 crores of equity at 50 cents on the dollar, and therefore effectively, I just can't understand why you would dilute equity at this price. That to a private equity, it isn't like it's a strategic who's giving you orders on the table or any of that. And would also like to understand if there's any kind of conflict of interest, and if the promoters are also have any investments in this private equity entity at all.
If you are there are 2-3 questions coming out, that although there is no pressing need for the funds, it definitely enhances the company's ability to be bigger and look at larger investments. But yes, there is no pressing need for the funds. But we have the plan to go to the next level with future technologies, competency, and potential investment. So the fund can be little more beneficial and to place us in this. The basic is that, as I mentioned you in my this is how to build a sustainable businesses and create long-term shareholder value through their operational partnership, and that is what is we are seeing that how and we should align with them and take their wealth and their expertise in different areas to put together will greatly benefit all the existing shareholder in enhancing the value of their holdings. This is what is the reason behind that.
And is there any kind of conflict of interest? Are you an investor also in actually taking extra kind of capital at all? Do you have any investments in the AIF, in the fund?
There is no conflict of interest, Rajesh.
So we don't have. So I mean, the promoter or any of the promoter interests have no investments in the AIF.
No,
is that right?
Yeah.
What is AIF?
Whether you have invested in their fund?
Oh no, not at all. That is not at all.
Okay. So, and the other question is, we also saw that Mr. Lakshman has resigned. Just wanted to get some degree of granularity on the reasons behind it, because obviously he's been instrumental also and had given investors a lot of comfort. So if you could just actually emphasize to us the reason of the resignation.
Yes.
I think Lakshman can answer this question better.
Yes, Ashok, you can add after that. Okay, Rajesh.
Let me start. Yes, since last 3.5 years, Lakshman has been operating out of Gurgaon. Less his family, who continued to be based out of Mumbai, to various family obligations, which can be very challenging at times. And Lakshman has a desire to pursue the things which is closer to his heart, and that is why Lakshman will add more. And all that Lakshman has been in our board since last 10 years, and in 2017 he became a whole-time executive director of Spark Minda Group in the capacity of Group Chief Financial Officer. So that is why we decided, myself and Lakshman and this board, that he will continue to be in the board of Minda Corporation Limited in the capacity of non-executive director. This is what we have. Lakshman, over to you. You can add more.
Yes, thanks, Vijay, for that question, and it's a pretty personal one, and I will share with you. I have enjoyed the last 3.5 years or 3 years and 8 months. However, physically it has been very, very taking a toll, in the sense I've been flying every weekend to Bombay and back from Gurgaon. And post-COVID, it's just made it even more difficult, and then with the family, finally we decided to settle back in Bombay. So it's a pure decision based out of family compulsions, nothing else, nothing more, nothing less. I am absolutely continue to be a cheerleader for Minda Corporation, and I will continue to be, thanks to Mr. Minda's point, I will continue to be on the board as a non-executive director from 31st December.
Yeah, correct. And the last question with regards to the private equity investment, is it subject to approval of all shareholders, or all shareholders excluding the promoter? Is it a majority of a minority which is needed?
So my answer is, I don't think the promoter is an interested party in this at all, and we will go exactly as per the compliance edition.
Okay. All right. Thanks. That's all.
Thank you.
Thank you very much. Next question is from Chetan from Alpha Accurate Advisors. Please go ahead.
Hello.
Hello, sir. My question is, I have two questions.
Who's speaking? Sorry.
Chetan.
Hi, Chetan.
Hi. Sir, I have two questions. Firstly, so what is the private equity player bringing on the table for us in terms of immediate orders or anything? Or what kind of advisory or cost benefit can we get from their advice or consultancy in our business? With price of 70 rupees, and we already have a net cash balance sheet. So why dilute this? This is the first question. Thank you.
Okay.
I have already replied the same thing. Lakshman, if you can add further what I have explained before.
So my addition to your points, Mr. Minda, is not too many. But Chetan, I will say this, that point number one is there is a lot of value that a specialized investor brings to the table in terms of expertise, in terms of attracting the right further long-term investors, strategizing capital allocation, okay, and developing an EV strategy for us. There were a lot of things that we can probably learn from industry experts, and the current private equity fund does have a very, very credible bouquet of industry experts in it. And for that and the entire value add that they give, if there is a commitment that one has to, kind of put in terms of a dilution, which is, I would say, small because it's less than 5%. I think it would benefit the entire lot of shareholders. So to that extent, I would say, and of course, additional money gives us more leverage to do larger investments. But that's the second point.
Hello. Okay, sir. Sir, second question is with respect to RM indexation. So, by what time or timeline would you expect this RM indexation to be passed on completely? And what would be our EBITDA margin guidance from here on for next year? Not for the immediate next quarter, but for next year, for next 2 years, what would be our EBITDA margin guidance? Now, double digit you have already alluded, but what sort of number should we look at? Can it be closer to 15% or what? Can you just help us with that?
First point on the RM indexation, it normally gets set on corrected in the next quarter. So you will start seeing it corrected in Q3. Of course, there's always a 1 quarter lag when corrections happen. That is point number one.
Adding to the point number one, we have back-to-back arrangement with all the customers. But when the price,
sorry, what would be the impact, percentage impact of RM indexation on gross margin this quarter?
On an EBITDA basis, we would have it would have impacted us by maybe I would say close to about more than 150 basis points.
Okay. Continue.
And this indexing is we have a back-to-back arrangement with the customer. But when the prices goes high, we impacted on the negative side. If the prices come down, we impacted on the positive side.
Okay, sir. And with respect to EBITDA margin?
I think your second question, see, our long-term vision is to consistently increase the EBITDA margin. Our first, what shall we say, line was to cross the double-digit EBITDA and thereafter grow consistently. Whether in terms of a 2-year guidance, we are not yet sure to hazard a 2-year guidance right now. I think we should wait for a couple of quarters for the post-COVID numbers to stabilize. But we are very clear that we would like to consistently deliver double-digit EBITDA numbers. Mr. Minda, if you'd like to add anything.
Yes, we expect that if the market continues to be like that, and the reason what we have explained, the indexation, the localization, the productivity improvement, the aftermarket and the export sales growth, all will definitely increase quarter by quarter the percentage of EBITDA margin.
Okay. Thank you, sir. Thank you for your detailed insight.
Thank you very much. Next question is from Mayur Malik from BOB Capital Markets.
Hi. Trying to understand two things here. One, that you're saying that, just trying to read it the other way around for the private equity investment. Are you saying that this was more like a deal where they also said that, they would like to benefit what they do for us in a long run by actually taking an equity in the company rather than upfront fees or something like that for their services?
No,
Yes, that is why, the commitment that brings additional capital as a part of their commitment to achieve the common goal. And the common goal of all of the shareholder is how to increase the value of shareholding value. So, and work jointly with the partnership, and as I mentioned, that we there is no pressing need of the fund, but with jointly working with their team, and which I have already explained, and definitely that is the objective to bring the shareholder value.
Right. And when you say no pressing need of the fund, I also want to understand we had raised funds earlier as well, and I think that still sits on our balance sheet as cash. Haven't we really found anything very interesting to really invest the idle cash? I mean, at the end of the day, it depresses all the returns, right? I mean, we're sitting with idle cash. So just wondering that.
Yeah, because I always feel it is better to pass the fund instead of spending somewhere which is not fulfilling the norm. So the most important is the capital allocation is very, very important. And so if we'll get anything which will fulfill the norm and which will definitely increase the shareholder value, there we are going to invest that money, and that is what we have seen in the past, and definitely we will invest there. Whatever the money we have in our kitty, we will be investing. The allocation of that capital will be very carefully to see how it can benefit to all the shareholders.
But do you have anything? I mean, since you are very clearly mentioning there is nothing immediately pressing, do we really look at any investments coming before FY22, or do you think it is something beyond next 12 to 18 months?
We are working for the various options. As I mentioned it is a continuous process to identify within the portfolio, within the synergy which we have, instead of going here and there. And it's a continuous process to identify, subject to fulfilling the norm and giving us the benefit in the shareholder. But it is a continuous process.
Yeah, and will this private equity also assist us in identifying
yes, very much
investment opportunities?
Yeah, very much. They have a good experience in EV sector, which Lakshman has mentioned, and definitely they will also because you have seen their team, which will also support us and will also involve them to identify the products and the businesses where we can go for further investment.
Right. I mean, sir, I think, I do understand that you would have taken a rational call, but just trying to, what probably is not getting digested from my understanding from the call, I think from most concerns that we have, is that we could have always had them as consultants, and we could have rewarded them based on a percentage profit as and when they would have delivered. Diluting equity at this price, I don't know, it doesn't really gel with the overall need for this at this point.
See, basically, which is also possible, लेकिन जहाँ पैसा लगता है ना, वहाँ the commitment is much more commitment, because whosoever is going to invest, they wanted to return of that investment. So one is that. So hence the equity dilution is less than 5%. But I believe that if the overall the holding of the shareholder increase much more value, then all this will not be seen very important. But the ultimate big goal and the target is how to increase the shareholder value. That is the objective of bringing that. It's not an investment. It is a partnership, operational partnership, which will increase the shareholder value.
Right. And so last question on the operational side of the business. So, are you fairly confident that the performance that we've seen in Q2 will now be a standard, at least for Q3, Q4 going forward? As in, this should be the least minimum that we should expect if things remain the way they are.
I don't know. We are crossing our finger. First is how market moves after the next quarter. If the market remains the same or better, definitely there is going to be the continuous improvement. That is quite sure. It all depends on what is going to be the market situation.
If I may add into this, this is Neeraj here. I think two factors will play strongly in this case for us. We are, apart from the market, how it is expected to do is going to be one factor, but operationally, organization is geared up to meet the demand. It is very evident. We have been able to meet most of our customer, order booking, which is indents which have been coming in. So in spite of COVID challenges, and we have a very healthy order book, as I mentioned, at this point of time for the Q3 and Q4 both. So we are keeping ourselves ready so that if the market continues to remain stable and growing, we should be able to meet all that requirement, to answer that question.
In addition to that, there are so many areas which is one-time expenditure. That also we will get the advantage of that. Adding all this, the market and all this continue to be there, definitely there is going to be the continuous improvement.
Thank you very much. Next question is from the line of Chirag Shah from Edelweiss Securities Limited. Please go ahead.
Hello.
Hi, Chirag. We can hear you.
Yeah. Sir, again, sorry for coming back to the preferential allotment. So this PH Capital board members.
Your voice is echoing, Chirag.
Yeah, just a sec. It should be. Hello, am I audible now?
Yes.
Hello.
Yes.
Yes, Chirag, you're audible now. May go ahead with the question.
Sure. So the question is that the board members or the advisory members that you mentioned about PHI Capital, so they are the advisory members or they are the active members of that entity? Because such a great experience, if they're active members, would be more of relevance to us, right? And if they're just in advisory nature, then how would it be? So can you just throw some light on that? The stalwarts of the auto industry that you mentioned, are they active members or they are just advisors to PHI Capital?
No, they are an operational member. With the name what I have told you, they are all operational. They have the advisory board, but as you very correctly said, we all know that advisory board is for the advice only, but they are other what the name I have taken, they are the operational member, and that is going to be the advantage which we wanted to have and we wanted to take with this alliance.
Because the investment seems to be in the auto ancillary and automobile space, the PHI Capital. So if I can just stretch it ahead, so how do you see what are the areas that you see the experience? Because on operations front, on client interactions front, or this is primarily from acquisition perspective that they could help you out in that. So what are the key areas that you are looking at from the advice from their perspective? And are they likely to join on board? Because you might as well taken them on board without an equity offering given to them. You could have offered them a board seat without giving an equity offering to them.
Next one, because voice is echoing. If you have heard properly, can you reply?
Yes. Chirag, actually, I think it's a point where you're saying one sees value in what they are bringing to the table, and there is a what shall we say, dilution that needs to be done to ensure long-term commitment and for working on these objectives that we are talking about. So therefore, we think that end of the day, it will increase the size of the pie much more for everybody to partake. Point number one. Point number two to your question is, in terms of what they bring to the table, I think, as Mr. Minda mentioned, they are people who are very senior there and who are also having operational expertise, which they can bring to bear in terms of their experience on the table. And second, yes, strategic objectives to operational objectives. It covers the whole, what shall we say, plethora of areas that one can look at. Of course, we'll have to see that there is a right blend of what we have in-house and what we take from them in terms of expertise. But our belief as management is that it will be value accretive in the medium to long term.
So my question was also then why not offer a board seat also? Because if they get a board seat, the active involvement would be far higher rather than just being an equity investor with.
Actually, that's a call, Chirag. I mean, that's a call, and also it is in terms of, I mean, we do have experts on the board even now. So I think that's a call, frankly, Chirag. I mean, we leave it at that.
Okay. So second question,
Chirag, as you said that one is the strategy bringing in that these are the operational team they have, and what is this the technology side, the strategy side, the finance side, from EV side, manufacturing side. If you see there, the name what I have said, they are the expertise in all these, or they are this in all these areas. And addition to that, they are investing also to show their commitment. And that is why I would say, आप लोगों में से एक ही we are bring in, and how to take it forward, this company, and how to increase the share value of all the shareholder is the basic objective.
This is helpful, sir. So second question was on, again, coming back to the margin side. So you indicated 150 bits impact on your gross margin because of commodity indexation issue. And this indexation issue is largely for which commodity? Is it primarily for copper, or it is across, because on die casting you use some other commodity, in wiring harness your key commodity is different. So the indexation issue is coming in which commodity actually, primarily?
If you have seen the presentation of Lakshman, the business, the wiring harness business is the main reason, and there is the copper in the wires. Majority raw material content is the copper. So that impact is substantially there.
Okay. And when you say it is likely to reverse, basically you are indicating that in the next quarter, the indexation would now turn in your favor. So the impact would be seen on immediate basis, or there could be further lag, the reversal impact.
We have a back-to-back arrangement quarter-wise. So every quarter, if it is an increase, then as per the previous quarter, we will get our price amendment. And if it decrease accordingly, our buying is less, but we get the higher price from the customer. So that is why I mentioned when the price will increase, there is a disadvantage to the company, and when the price comes down, there is an advantage to the company, and this is the cycle. That is what is the pricing indexing has been done with the customer.
Yeah, no problem. So basically, if copper keeps on increasing, it keeps on getting postponed because we are by a quarter. If the commodity price keeps on increasing, then the impact will be seen with a similar lag, right? The copper has to be stable for this indexation benefit to flow in the P&L. Is the right understanding, Lakshman?
That is correct, Chirag.
Correct, huh?
We need to reach a stable level of pricing, and it's not as important as whether it is high or low, but as long as it's stable, we'll be able to correct it.
Okay. This is right. Thank you and all the best.
Thank you.
Thank you very much. Ladies and gentlemen, due to time constraint, that was the last question for today. I will now hand the conference over to the management for closing remarks.
Yeah, thanks for participating in the call and looking ahead. We are cautiously optimistic for the second half of the year, as the initial phase of festive period is indicating the sustenance of the demand. We have discussed a lot about this, and I have explained about my intention, and I wish definitely how we should do the consistent growth to achieve the expectation of all the shareholders. And then I once again thank you for our entire Minda team, our customers, our vendors, and all the stakeholders for their continued support, which has allowed us to navigate through these challenging times. Thank you, ladies and gentlemen. Thank you very much.
Thank you very much.
Thank you very much. On behalf of Intech Securities and Finance Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.